Hey, how's it going, everyone? Welcome to the SPY discipline system. And I wanted to go over a handful of things that have made me very profitable. In this episode, I am going to show you guys how I set my key levels, how I predict what is going to happen and anticipate the move. Now, let's be very honest. Most traders lose when they think they're losing when the trade goes against them, and that's not the case at all. What's true is they form a bias based on CPI news, based on PPI news, based on FOMC, and they form these daily biases the night before or during the pre-market hours that is happening that absolutely devastate the way they trade. Now, if you will focus on what price is telling you and get rid of those biases, and you literally just focus on price action, your key levels, and the draw to those next levels, you will be a profitable trader. All you have to do at that point is enter your trade, go risk-free when it tells you to, not when you want to. Go risk-free when the chart is telling you to, that it's an area of draw, it's running into some resistance or running into some support somewhere, and it's having a hard time break through that. Now, if you can master those few things, which sounds really simple because it is, right? So you just got to think about it like this. A good plan gives you scenarios to become profitable. I'm going to say that again, guys. A good plan gives you scenarios to become profitable. A biased gives you an opinion and it gives you tunnel vision and it'll screw you every time. So get rid of the biased, forget what the news is saying, and trade those charts. Now, I'm going to go over what I was doing today, and today is the 23rd. Some really good setups I took, had a really nice green day. I had a couple of stop outs, but I had a lot of really good trades. So my support, my resistance, my underlying support, and my overarching resistance is way down out of the way here, as you guys can see. Now, what I'm going to do is the first 30 minutes of the day, I don't trade. 9:30 till 10 a.m., I don't trade. If there's a news candle that drops as 10, I don't trade till 10:05. I'm usually done by 11:05. I look for my 1, 2, possibly 3 high quality setups, take them, take my money, protect those profits if you get them. If you get stopped out once, you look for another trade. If you get stopped out twice, the strategy that we're employing does not work that day. Come back to it later on that rest of that afternoon or the next day, and that's completely okay. If you chase losses and you size dynamically of how much you love this trade or this setup in the beginning, you will eat your account alive. You will devastate your shit. So let's just focus on what SPY is telling us today. So very, very clearly, we have all of my levels were still set, just so you guys know, from the previous days, right? So I have my highlight of my previous day highs, my previous day lows, my aftermarket highs, my aftermarket lows, my previous day highs, my previous day lows. And then I mark the opening candle, the closing candle. And recently they started posting this like little purple zone, as you guys can see here, the midnight, whatever is going on here. Kind of mimics the ES chart because I only trade SPY. I've nicknamed that the twilight zone. Don't know if it's really relevant yet. I back tested it some. I'm inconclusive on my data. I've only back tested about 35 days of it. When I have about 100 days of back testing, we can see if those levels become relevant. As of right now, they're on my chart for back testing and forward testing references. So we have our pre-market highs, our pre-market lows right here. We get this huge sell-off in the pre-market. So SPY was at, let's see, way up in here in the 776.10 range, right? So really high up here, it crushes all the way down in the pre-market, comes all the way down to 738.99. So huge, big sell-off, right? Like close to 10 points, right? Opens up New York session, bam, comes down to 738.47 out of the gate, shoots all the way up. And this is in the first 15 minutes, guys. Shoots all the way up to 742 even, I think it is. 742.56. Starts to form a range. Okay, now we're going to get into our timelines, right? So right here's our 10 o'clock. So at this point, we have where I had formed a resistance line, team. To me, it was very clear that we had a resistance line forming here at this level of around 741.33, right? So a nice high level, nothing impossible. to get past really clear. And as price starts developing, I started bringing this down, right? But a lot of people will say the trend is your friend. Sometimes it is, sometimes it's not. I do like that slogo. I don't have anything against it personally. When you have a really big bearish trend like that, I think what the idea of it is to find the highest level of conviction to get into that downward trend, right? So big downward trend like that, you want to look for like a high point of rejections to get into a trade. Now, that being said, I had this huge line of caution marked at 739.62. Now this, I'm just going to scroll through my charts. Now bear with me, guys. It's going to take a little bit of time to show you what this means, right? So this is on the big picture of trading. If you look closely here, this caution line is a level of support that formed on Wednesday, July 8th. And then in the pre-market, Wednesday, July 8th. Okay. Now you keep going back, and then this is an area of problem in the aftermarket on the 29th. So this is here where it has tested it as support. This area over here that we just looked at is now support. This level over here is where it comes back and tested as support. It pierces through it and distributes up and above it on the 29th of June. It rejects it here as resistance on the 26th of June. And then again here, it rejects it as a resistance on the 25th. Now, levels usually are not that confirmed that far back. Again, it's resistance, guys. Right? And this is the bigger picture, right? And I trade the 5-minute chart. However, when you have something like this that's this relevant, and then all the way again here. So we have back to the 23rd of June. So lots and lots of problem areas on this hot caution line, guys. Got it? All right, so let's scroll back to this recent price action. I just want to show you what this line is coming from. Usually, these aren't relevant. Today, it was very relevant. All right. And here we go back into today's price action. So let's zoom in on this a bit so you guys can see it nice and clearly. This is what we got. Opening candle. I trade, like I said, 10 o'clock to 11 o'clock, and then again from 2 to 3. And if you're interested in how I trade, you like this, please, guys, like and subscribe below. There's a link in here if you want to be in the course where we show this to hundreds and hundreds of students that have like financially changed their damn lives. It's absolutely incredible what's happened here, right? So here's where we go. Let's talk about this. Resistance. I formed it at 740.95. Now we're going to scroll it down and support because we're looking for puts because this is very, very bearish, guys, right? I had found this upper level here, right? And this comes down and it goes right below that caution line. You guys can see it really clearly here. This was my level of support. We had draw all the way down there. Now, this is at 955. I didn't take this. This is not in my trading window. This would have went red and stopped you out. So now, next candle here closes red below it at 10:05. There's a nice amount of draw down. It comes and rejects the pre-market low. I stayed away from this scene. Okay? I know this checks all my boxes. The reason why I stayed away from this, and this is the most important thing I can tell you as a trader, just because it checks all of the boxes, it can uncheck a box in real-time price action, and that can give you a reason to stay away from it. No FOMO if you missed a trade. That shit's bullshit. FOMO, that whole fear of missing out thing was probably made by some 12-year-old TikToker, some shit. We're not using that in trading. It's an absolute useless thing. The emotions got to go. Stay disciplined, stay true to your system. This shit works. Now look, you have this break here. It comes and it touches just below pre-market low and it comes back up and closes. That's a rejection, guys. I stayed out of this trade. I did not take it. Comes back up. Depending on where you had your stop at, maybe it stops you, maybe it doesn't. This gets super heavy and green. I do not take this candle. This candle, team, now we have confirmation. It's holding this upper level of support that we had marked earlier, right? It's holding below that. We get this little candle here. This is a firm candle. I took this candle. There's now a high enough level for it to draw back down and test this. I took this trade. I thought at the time was a really high quality setup. This trade goes down. It goes into my favor. It goes against me. It goes back into my favor. I ended up collapsing this trade. I did not stay in this trade. and I got about a 3/4 trade. I'm sorry, I got about a $3 profit on this trade times 100 plus contracts. Made like $300 on this. It was a very bullshit trade. Then trying to preserve the capital, did not want the headspace of being stuck in a trade that was not going the way I wanted to with this wickiness. This trade goes green. This candle goes red. I did not take this candle. This candle here is green. It does not violate. This candle here, firm close, firm and below pre-market low. I took this. It immediately retraces against me. I got stopped out, right? First stop out of the day. I had this little bullshit trade here. I get stopped out on this trade. Big deal. It meets all criteria. It takes out the pre-market low. You can very clearly see, I'll zoom in for you. No big deal. Red trade, right? Checks all the boxes. It comes, it retests and goes red here. As soon as it closes red again, I entered right here. Boom. Confirmation of this level, now closes decisively below it. It immediately goes up and retraces against me. Contracts held nicely. I come down here. I get half off of my positions down here at this level. I get another 3/4 of my positions off. I have my stop now at break even team. This trade continues to run down here, and I'm going to draw on this for you guys so you can see a little bit better what's happening. This trade here comes back up, doesn't stop me out at break even. At this point, I had took 140 positions. I had sold 70. I had sold 35. And now I'm trailing 25 of those. I ride this down here, all the way down into here. I ride this candle down. I get stopped on my trailers here, where I got filled at like 146. I get stopped on my trailers in this section here at $2.12. I got really good exits there. I left my straggling positions up here at my entry, guys, right up here. This trade continued down. I had no lower levels in here. So now I started protecting a swing point, and I got my stragglers into this area here. I was protecting this top level here at $2. Those contracts hit 260. I sold 5 of them, of the ones that I had remaining. I'd sold 5 of them down here, guys. I thought was a really good selling point at $2.40 something cents a piece. I didn't get the bottom of it, but I got a really good exit on them, and then I left the rest of them at $2, and they eventually got stopped out with this candle coming back up in here into range. So very high quality setup. One stop out, lost about $2,000 on that. Next trade, I made about 4,200 on the way out of that, on all my exits and my positions. Net positive $2,200 in the morning. Not my best day, not my worst day, but a very profitable day with some really, really good selling pressure. Now, guys, let's think about this for a moment. So we have this great setup here. We've all talked about this. We broke it down, very clear. Now, just want to be very clear. You've won or lost your day of being a profitable trader, whether the day is green or red. Your mindset and how you approach it, being calm and collective, bearish or bullish, entries and exits, all of that has to be predetermined before you approach it. You have to have a plan. You have to be disciplined to your plan. You can't deviate from your plan. Oh, I like this setup more. I'm going to add more positions. Oh, I don't like this one as much. I'm not going to have as many positions. If it checks all the boxes, you size very dynamically. The only reason that you adjust your sizing right before you enter the trade is if you're going to enter with 10% of your account and a 10% stop loss, right? Hypothetically, you're willing to risk 1% of your account on that stop out. Now, let's say this chart is telling you that you have to have a 12% or a 15% stop out, right? You now have to dynamically adjust your sizing to the right amount of contracts to keep that level, right? So if you're going to be at 10% with a 10% stop, and now you know that you need a 15% stop out, you have to adjust that down to about 7.5% or maybe even 7% with that 15%. So that way, when you get stopped out, the same amount of money is missing from your portfolio, never risking more than that. So your first victory of the day, it happens before the opening bell. It's entering the market, calm, collective, decisions have been made. I'm going to take the close below this key level. I'm going to take the trade above this key level. Is there enough draw to the pre-market high, to the pre-market low, to the previous day high, to the previous day low? Those are huge liquidity pools. You want to try to catch in your calls the lowest level possible to break into that higher level. If you're taking puts, you want that highest level of confirmation to write it down to the next lowest liquidity pool. Guys, don't overthink this trading thing. It can be complicated. There can be hard days. There can be great days. If you approach it with the same fresh mindset daily and weekly, and you're consistent to this process, you will make a lot of money. So if you like this video, guys, like it, subscribe it, click the link below. I trade 9 times a week, Monday through Friday, 10 to 11, Monday through Thursday, 2 to 3 p.m. Like, subscribe. See you guys on the next one.